Hello, everyone. Happy Monday. How is everyone doing today? Good morning, Patrick. Good morning, Mark. Good morning, Jacob. Good morning, Yogi. Good morning, Royal Palms. Good morning, OD Green. Good morning, Anissa. Hey, Eric. Thank you for tuning in. Year 3. Well, congratulations on that. I'm glad you've learned so much. Good morning to his new little friend RSV. Good morning, Holy Holy. Hello, Charles. How are you doing today? Good morning to Patrick and Rusty over on the good old Rumble and people in the background over there. How is it going? Again, Santa rally. Today we're getting a pullback, but Santa rally season. Silver finally pulling back after its insane move on Friday. Still technically above Friday's open in the lower liquidity markets. Also on silver, CME are raising the COMEX is raising margin requirements. Good morning, David. You have the China doing a war game exercise around Taiwan, which has some things on edge. But we still are here. I'm glad we're getting a little pullback uh, before the end of the week. Good morning, David. Give a chance to get some possible pullback and then some new short-term positions through the end of the year. Remember, Thursday is New Year's Day everywhere in the world, and the markets will be closed. But, oh, by the way, I'm feeling a little under the weather, so if in case it gets a little worse, if I need to cancel a live stream, just again, look on the Twitter feed. Not going to call it X. Look on Twitter. I'll announce if I need to cancel a live stream this week. Hey, Balashi, good morning to you. So, but hopefully I won't. Just letting you know that's where the announcement would be. If you don't see any thing like pop up on YouTube or Rumble, then just check the Twitter feed. And if you don't follow me, it's at MG Arnold. So we got pending home sales coming out at 10. Yeah, we understand. Busiest week, Sterling. You tune in when you can. Otherwise, I hope you have a great week. I know this is a busy one for you. I hope everything goes well this week. Thank you. I hope I do not have the same RSV you have. Holy, holy. We will see. We shall see. Yes, and if for those who don't know, Sterling is in the car dealership world, specifically Toyota. Toyota is very popular. Santa Rally is Sterling's in his Santa Rally at the Toyota dealership. So we have pending home sales. We have the EIA numbers from last week. Okay, these are from last week. We have two sets of EIA numbers this week. We have today's from last week, and we're getting a nice little bounce in crude today. And we have December 25th. So we have the 19th coming out, which was technically the week before, which should have come out last week but delayed due to Christmas and the timing of that. And then we have the ones from December 26th. Where is that? December 26th. The AI numbers coming out on Wednesday, New Year's Eve. So just pay attention to that. Other than that, I mean, it's still going to be a slower, very thin liquidity week. We have Redbook. We have Case-Shiller home prices tomorrow morning. We have Dallas's services index. We have the FOMC minutes coming out from the last meeting on tomorrow, on Tuesday. Initial and continuing jobless claims on Wednesday this week because Thursday is a market holiday, and then Thursday nothing, and there will be no live stream on Thursday, so don't look for a live stream on Thursday. And Friday we just have the global manufacturing PMI final numbers. Friday is going to be another very quiet day, even though it's the day after New Year's. A lot of people are not going to be around for that. So again, lower liquidity week. We can get some more sharp and sudden moves. It's also why you saw silver, very thin markets, also some short squeezes still going on. But people are piling in like they've turned silver into a meme stock. Everything piling in, trying to juice it higher. And then, so watch, be careful with that. What do we got? Sterling, we got the three Santas. Good morning, Kevin. How are you doing? Are you still in Lakeland, Kevin? So that's where we sit. The S&P 500 map. S&P 500 map. When we move a couple windows out of the way, we have the semis all down. Pretty much the Mag 7 all down. Other than that, the rest of the market is mixed, but it's the Mag 7 and chips. So that's really driving things this morning. Again, you have the China war games around Taiwan, which can really shake up some things. It's not made a lot of national news, but it has made market news. Good morning, Heinrich. How are you doing? Hope you're having a wonderful holiday season. So pay attention to that. Group, let's just refresh. There's your basic materials down with silver, gold, copper is even reducing. Platinum moving down. Energy up with strong little bounce and crude today. Consumer defensive. Then you have everything else is down, but not bad until you start getting consumer cyclical comm services technologies. That's what's starting to hammer everything. Fed watch for, remember, the next meeting is at the end of January, so 30 days away. We're still at 80% for a pause. Fear and greed. We made it all the way to greed. This will probably drop back to neutral today. Sugar PE 40.74. Very expensive market. Again, no earnings. So just putting that up there. Just no, I don't know if I'll put it up the rest of the week, but there's nothing scheduled. You don't pick up. Just keep this in mind. We really don't. We have some things following. We have some things next week, but nothing major until the following week, which kicks off the next earnings season. Okay, so that's when we really have to start focusing on earnings again. All right, all righty. So we had again. Well, how many days was this? One, two, three, four, five, six. Virtually Friday was a doji, but 5.5 days up. Cycles to the top coming out of overbought conditions. So not surprised to see a pullback. We've already dropped below the 4-hour rotation zone. If the drop continues today, again, I'd like to see a drop to be able, at least in the daily rotation zone, there's a ton of support over here. A ton of support. You have the rising rotation zone. Very key support area, not only because it's ADMA, but the 6930 area right around, you have right here, you have some key closing areas and this spike high from December 11th. And, you have the sort of the breakaway, you have the breakaway gap open, but that was a key closing level. So if we continue to drop, I'm looking closer to 69.30. Below that, 69.07. And if we did continue to drop over the next couple days, there's still a gap left behind. Remember, we're on the March contract. There's still a gap left behind. We're back to the continuous contract, but there's still a gap left behind in the March contract back to 68.87, close to the bottom of the rotation zone. So those are all the levels. I'm still looking for up moves. The probabilities are still for higher. Now it got overextended at the beginning of the Santa rally, so not surprised to see a pullback, but we'll be still looking for buying opportunities unless we plummet below the daily rotation zone. Okay. If we spike up into the open, this is a weakening 4-hour rotation zone, so really focus on that 68.30. If we do spike up, again, it's got to, for me, it's got to get back above 69, about 63 before I'm really interested, unless we make some bottoming formation. The Nasdaq, again, Nasdaq's been the weaker one. The first thing I'm still looking for continued up moves, I'm going to the S&P first. The Nasdaq has not taken out its prior highs. If you even on the March, you see the March contract. I mean, it hasn't even taken out its highs from earlier in December. And you can also see it on it, the continuous contract. It's taken out because of the roll. It's taken out the highs, but really, if you want to see how weak it is, it's weaker than the rest. So is the Russell right now. So keeping an eye. This is not the first thing I'll rush into for bottoming setups, but I am watching on the continuous contract. We're back to the rotation zone. There's a key level about this 25,600 to 2520. If we start dropping below that, I'm looking closer to right around this 2490 to 2500. 25,500. Okay, also coming out of very close to being overbought with cycles rolling over. So, and that this dropped uh, during the European Open below the 4 hour rotation zone. So I will still be looking for bullish moves. We have a gap also left behind to Friday the 19th. The gap fill would be 25,574.75. So 25,575. I would not be surprised on further weakness to see that gap fill. Again, I need to either see this pullback and then some kind of bottoming formation, or for the NASDAQ, for me to get anything bullish without a bottoming formation, we have to really start proving itself again 20 above 25,812. 25,812. One of the things I do, and you've heard me say this in the past, is I know based off relative strength and weakness which markets I look for. If we do get the bullish setups, which one I prioritize for looking for the moves up. Now, my priority right now is the S&P. The Dow, since it's also fewer people trade the Dow, but it is at highs. Even if we look at the contract roll to March, you can see it took out the highs, flagged down, and approaching the prior March high contract. If we look at the continuous one, you can see here with the rising rotation zone. So the technically the Dow is the second one I'm looking for bullish moves up. The key area I'm looking at the Dow, we're approaching it now, this 48,805. If we drop below that, I'm looking closer to 48,700. On a more significant pullback is 48,450. The Russell's also not one I'm prioritizing yet. It will be real interesting if we start getting close to 2530. 2530. We still have a potential double top in the Russell too. All right, so pay attention to that. If we slice through the bottom of the rotation zone, I will watch for this potential double top. Other than that, we're really going to be focused on the Russell if it gets closer to 2530. We're doing a channeling pullback on the Russell. You can see a really orderly channel pullback here on the 4 hour. All right, so that's something that I am paying attention to in order for this to really start without a bottom pattern. I need to see it back above 2550, 2551 at a minimum before I'm interested, unless we pull back closer to the bottom of the rotation zone and form some kind of bottoming move there. Hope this is all making sense. VIX up slightly, but in the context of this, not much. Again, if VIX drop, would not be surprised to still see a bounce back this week. But again, if you're looking for, I think 2026 is going to be a very volatile year. So if you're looking for longer term hedges, look for some volatility. I mentioned that last week. Look for volatility hedges. Look for volatility hedges. The yields, with the market pulling back a bit, very strong support at this 411, 412 yield level. 30-year also really, even with this pullback, remember, people on days like this go into some notes or some bonds. But look, it's still holding. It's very key support level. Nothing on these pullbacks invalidates these bottoming patterns. What else? Crude rally here. The only way, I'm still looking for pullbacks in a stronger bottoming pattern in crude. We get 2 sets of EIA numbers coming out this week. The only thing that will make me sit up in crude and start taking notice, let me show you a couple things. First of all, The weekly rotation zone is still down. Now, I think we're starting to carve out a more significant bottoming pattern. All right. Do we have a great pattern just yet? No. But the weekly rotation zone has been very key resistance. So, in any bullish setups into the weekly rotation zone, I would not get greedy. And the 50, look how well the 50 has held. You see this? Even last week with the little spike on Friday, then the sharp drop right near the 50. So for that's the pattern. We need a close above the 50 before. That doesn't mean I'll rush into crude, but that means, hey, I'm going to sit up and take notice that a pattern that's been holding for quite some time is broken. Other than that, I'm going to be watching the EIA numbers closely. Gold, getting the pullback here. Remember, margin requirements are also going up on gold, I believe, too. But coming back into a very key support level. Prior highs, very key support level with rising rotation zones. Would I just rush in and buy this now? No, but this kind of reaction. Now, the secondary bounce that we get, and I'm not saying this has to happen today or even tomorrow. I'm going to be looking like a 4 hour, 1 hour potential bottoming setups. But the next move up, the next bounce with a candle like this is going to be very key. Remember the last time we had, if I extend this, you see how we started pulling away here, and then we got the major reversal candle coming down, testing the bottom rotation zone, building a potential double bottom that never triggered, and then we got the further pullback that took a while to consolidate and then grind higher. That's why we pulled away. Warning candle here. We'll be watching the bottom of the rotation zone. Any potential bullish setups there, and then the secondary bounce. If we don't get the secondary bounce, then I'll watch for the pullbacks closer to the 50. If we do get the secondary bounce, we'll go over that in the live stream. Exactly what I'm looking for. Silver, which, all right, silver has become insane. When you get large bars well away from the 8, this one, remember, we went sideways. This one connected with the 8 and broke out. This, when we get large bars, large volatility well away from the rotation zone, be very, very careful. It's generally a end of a move, not the beginning of a move. And now we're actually below Friday's open. So everybody who are participated in this mania move on low liquidity Friday is now underwater. Okay? The secondary reaction is going to hold here. I'm going to be watching again closer to, we've already filled the gap to Wednesday, Christmas Eve. I'm going to be watching for, because this will be very interesting. The secondary bounce is going to be very interesting in silver. We don't have anything, I don't have any bottoming patterns yet. But when you raise margin requirements, it can. Also, China's doing, I think on Thursday, export controls on silver. So silver is going to be a very interesting one to watch this week. Would not be chasing it. Also, would not be trying to catch it. Just, oh, silver's cheap. No, silver's not cheap. It's gone on a massive run with a blow off top on Friday. Copper also outside key reversal day, already back to its rotation zone. Again, we had these stupid, silly moves on Friday, and now the people who rushed in late to the game are paying the price. There's your platinum. Another outside key reversal bar, nearly back to the rotation zone. Dollar index. We did trigger a percent B buy on Friday, with the first target being the rotation zone, which we already hit today. So now I'm watching to see if we form a stronger bottoming pattern. Remember, the short-term trend is still down. We have not invalidated the massive weekly double bottom yet. But the 50 EMA, if you've been sort of asleep, has held. What else? We got the euro. Euro still have a potential double top here. But other than that, we also have the final target for the double bottom that has not hit. Yields in Japan. Here you go. Here you go. There's your 10 not really moving, but look at your 30 year. Look at the 30 year. Rotation zone, rotation zone. Now we did have a potential double top, now turning into a triple top, looking to break out even higher. That's another one I'm going to be keeping an eye on. What else? Good morning, dark screen. Bitcoin ready to dive again. Well, again, Bitcoin. I think a lot of the Bitcoiners, a lot of the people who are in the juice of the Bitcoin have moved to the juice of the metals. Because look at this. There's been nothing. And we could still see another wave lower. You are correct. We could still see another wave lower in Bitcoin. I need a break below about 84,680. What else do we FOMO for the win? Yep. I think you got these things that just juice it, and all the people who rush in it, and you got the latecomers. It's the same thing as the meme world. Look at the patterns that we've looked for for the past few years. It went from the GameStops and everything else. Now you had it going into Bitcoin. Now you got it going into the metals. In terms of that's why, yes, we've been an up move. It's not I'm not saying they caused the up move. We've been bullish on the metals for a while, but they're in trying to juice it at the end. Trying to really and there's been some firms that have been way too short silver. So that's also contributed to it. But that's also why they're raising margin requirements. Get some of the speculation out. Spiders, going to be paying attention. We're into the 4 hour rotation zone. I'm looking at this 8650 area for support. If that breaks, I'm watching six I should say 686.50, 686.50, and then we have 684 are the key levels. If we do break below 684, we still have a gap left behind. Pay attention to that. You still have I don't know if that was fully filled. I don't think it was. So, and again, we're overbought conditions cycles at the top. So it's nice to see at least a little pullback breather for maybe it will only last today, but we'll see. Qs, decent gap down here. Key support area I'm watching is 618, 618.30. We break below that. There's definitely a gap left behind a 617.05. So Tesla also coming in here. There's a gap left behind back. If it breaks below the rotation zone, watch for the gap fill this 458.96. Remember, we finished the double bottom pattern. Tesla broke. It's still above its last breakout level. But there's not a great bullish case for this. We got waning momentum. I'm now looking for a more substantial topping pattern than that. So that's where we sit. Oracle starting to break down again. Let me see if this makes a stronger bottoming pattern, but nothing yet. That's it. Just be careful. Again, low liquidity week. You can get sharp and sudden moves. So don't put all your eggs in one basket this week. And we still have the tendency for it to be higher. Can we check out Sim? We can. We can. Oh, jeez. Wow, that's a massive potential double top. That would be interesting. Does it work? It does. So, the only thing that would make me start looking for a bullish case again would be above about $63.50, $64 range. This is not a potential double bottom because this is the move that blocks it. So it'd have to get above 64 before I'd be bullish. Other than that, Just looking at this, geez. Again, another one. No PE, earning EPS negative. Trading probably way beyond its means. So, but the key line the same would be 48.58. If it breaks below that, would not be looking for anything bullish. In the short term, it'd have to prove itself above 60. I'd say about 64. That's looking like the key breakdown area for me. 63.75, 64. So that's where it'd have to prove itself. If you get time this week, we'd love to see how you trade our NQ or ES, especially entries and exits. I'm telling you, I look for double bottoms and percent Bs, especially 4 hour percent Bs if I'm in bullish mode. You can even look for 1 hours if you're being aggressive. I watch those key levels, like the key highs and lows for those bars. And the 4 hour, I love percent B. Once I have a bias, so again, my bias this week after the pullback is for another rotation back up. So I'll be looking for 1 and 4 hour, either double bottoms or percent B buys. Those are the best way to do it. It's like a robotics company. Thank you. You might get a flush, but before a long term buy, you might very well get the flush. All right, we're open for the day. I'm gonna jump and watch a little key price action, and then probably I'll be wrapping up my day a bit early today. So I'll see everyone tomorrow, unless I don't feel well, and then I'll announce it on Twitter if anything's canceled. But assume it's not canceled unless you see a announcement. I hope everyone has a wonderful, wonderful trading day and a happy, happy holiday week. Sterling, hang in there at work. You're being your busiest week of the year. And thank you for tuning in. I'll talk to everyone later. Bye for now.